Today, we're talking about the performance in the Caribbean Growth Fund and the High Interest Fund for the second quarter of this year. So let's start with equities. Global indices, which depict the performance of a basket of stocks across the world, advanced this quarter, while our Caribbean Growth Fund was down a little. In the US specifically, a small number of stocks, especially tech stocks, powered the gain that you would see in an index like the S&P 500, while most of the other sectors in that index were negative. This happened because those few tech stocks have an outsized influence on market performance because they're so big. If all the stocks in the index were equally weighted, the index would have been down about 2%, which is a more fair representation of the broad market performance. Because we are a globally diversified funds, our non-US holdings would have also impacted our return as well. Our Japanese holdings were down in USD terms due to currency weakness in the yen over the quarter, but a bright spot for our fund this quarter was China, which is quite surprising. Chinese equities rebounded strongly after some time of prolonged weakness, and we're very excited to see that happen finally. Our Caribbean holdings were also down, unfortunately. All in all, that resulted in a 2% decline in the fund over the quarter. So now let's switch gears to bonds. Bond yields rose, which caused bond prices to fall, and this happened in the US. But the income that we have coming in from high coupons helped to cushion that fallout from the lower bond prices this quarter. As interest rates rose around the world, especially in the US, over the last 2 years, we were able to invest in higher coupon bonds because of that. So we're finally seeing that high coupons shield the bond portfolio from the negative fallout in the bond prices. We also saw better pricing on our government of Barbados bonds, and the good performance from our local corporates also added to the return in the high interest fund. Overall, our high interest fund returned 0.4% over the quarter. So now let's talk a bit about our outlook for the rest of the year. We have a positive outlook on equities, but we know that those with high valuations are pretty much vulnerable. And this is because in those valuations, analysts have baked in sustained high earnings growth expectations. And there are also some favorable scenarios with the global economy in there as well. So there's not much room for disappointment in the higher valued parts of the market, but the fairly valued parts of the market where we are invested, we feel pretty confident about those equities for the rest of the year. We are also optimistic about bonds as the Fed has not started cutting rates as yet, unlike in some parts of the world where rate cuts have started to happen. But the Fed does have room to do so now. And so we expect some rate cuts by the end of 2024. And also the high coupon income that we are currently earning in the fund should continue to support the fund performance in our bond funds.